Hi, I'm James Robinson, and this is my stock pick of the week. This video is going to be a brief video going over my year-end results and going over what I'm going to try and work on in 2020. Briefly, I try and post a video every week or two about companies that I think are good investments. I try and do a 3 or 4 part series on the investment, looking at the overview of the company, its operations, its debt, its dividends, and the company's ability to create wealth for the shareholders. What I don't often do is make videos telling you exactly when I buy or exactly when I sell. It takes a few days to make a video from the time I decide to purchase the stock. And I don't make videos when I sell the stock. So if you want to follow me and see what I'm doing and when I do it in real time, I always tweet about the purchase or the sale as soon as I do it. So if you follow me at Robinson Stocks, you'll be able to see in real time what I'm doing. I do this in part so there's a record of what I do and so that the claims that I'm making about my performance are verified and they're obvious to anyone who chooses to follow me. I'm not making any of this up. So even though it's just been just under 11 months since I began advising on the stocks I think you should purchase, I'm today going to close the books on 2019. I'm going to start anew in 2020. I'm doing this as the year end seems like a good place to start or end, to end last year and start the new year. I'm also really happy with my results, both in absolute terms and in comparison to the S&P 500. So I thought I may as well take advantage of the fact that it's my blog and I can do whatever I want and lock in my wins for 2019 and move forward with 2020. In addition to that, I'm going to make some changes. I've been asked by several friends who follow these videos to manage money for them. Managing money seems to be a different discipline than just picking stocks. There's more things that you have to think about and worry about. You have to worry about cash reserves and diversification, et cetera, et cetera. So this year I'm going to simulate managing a portfolio of about $150,000. I could call it 1.5 million or 150 million or 5 billion or whatever I wanted. 150,000 seemed like a right number. It's close to what I've been working with so far. It gives me a $20,000 or $30,000 of cash to work with in addition for future investments. So in the future, I'm going to have this mythical $150,000 amount of money that I can spend. I'll open positions, close positions. I'll have to worry about weighting my stock purchases. It's going to be a good learning tool for me. I'm not going to invest any of my friends' money until I'm very comfortable that I'm good at all facets of doing that. So another thing you should know is that in the slides for this analysis, I'm going to show you my actual results, and I'm also going to show you what those results would have been if they'd been grossed up to reflect a full 12 months. If I had waited till February 4th, which would be 12 months from when I first started. So I believe that money is made not when you buy or sell a stock, but when you do the research. So for this year, I researched 89 companies. That's less than in previous years. In part, that's because I spent a lot of time making videos that I might otherwise have researched. Now, in researching 89 companies, I want to make it pretty clear that 75% of the companies that I research, I almost instantly rule out. I can rule out within certainly half an hour after looking at their numbers. Most companies just don't meet my parameters. And so that leaves 20 or 30 companies that are that take a little more time, in fact, a lot more time in some cases, to really research and try and understand what's going on. So I'd like to do more than 89 next year, but that's what I did this year. Of the 89 companies that I looked at, just over half of those were companies that I'd previously considered in past years, and I thought, well, these look like it's a good purchase, it's a good price now, and so I needed to update the facts on the company from a couple of years ago, and the balance of the companies, about 45 of them, were brand new companies that I had never explored before. So to date, I have investigated 927 companies. One of my goals is to get that number to 1,050 in 2019. Of the 927 companies that I've investigated, 168 of those companies are companies whose fundamentals I like enough that I would buy them if the stock price was right. It's getting harder and harder as the market gets hotter and hotter to find companies that are well priced, that are good companies. These are, let's call the 168 really, really great companies. And so one of the things I'm struggling with is finding, of those 168 companies, ones that are cheap. The highest rated company, in my opinion, in case you were curious, was MKTX. Let you look it up and do some research. I think it's too expensive to buy, but it's the fundamentally most sound company that I've analyzed. But it seems like I'm not the only one that noticed. By the way, I probably should have bought it. It does currently trade at a PE of 71. So that's just too expensive for me. I'm never going to buy a company with a 71 PE. But if I had bought it in 2019, it went from about $200 to about $375 a share. So, what do I know? I'm not going to guess right all the time. I miss a lot more home runs than I hit, but hopefully I don't ever. I'm hoping to avoid the strikeouts. The lowest, just on the other flip side, the lowest company that I've rated is LNKD, which you guys, some of you may recognize as LinkedIn. It's truly a horrible company from a fundamental point of view. It makes no sense whatsoever. It's literally the worst of the 927 companies that I've looked at. But Microsoft disagreed with me and they put their money where their mouth is. They just spent $26 billion buying the company. So obviously, I'm no genius. I get them wrong far more often than I get them right. I don't have to get them all right. I only have to get the ones right that I choose to pull the trigger on. So in terms of what I did buy, the weighted average of my portfolio for the last 11 months has been $87,877.24. If you remember, if you first started following me, I had no stocks I was following when I started this. And every time I told you to buy a stock, I bought roughly $10,000 of that stock until I held it. And when I sold it, I sold it. And so over time, that portfolio got bigger and bigger and bigger. And that's why I'm using the weighted average, because it's hard to know what my returns would have been if I kind of started with some nebulous number. During the year, the portfolio has been paid $2,528.40 in dividends. That works out to a dividend yield of 2.87% for the 11 months. If you annualize that number, it would be about 3.32%. And that compares to, I just looked it up, the S&P 500 paid in dividends in 2019 about 1.85%. So we are not quite double the S&P 500, and we did that in 11 months to the S&P 500's 12 months. For the year, we have bought and then sold 14 positions for a realized total profit of $22,276.93. Again, that means I told you should buy this stock. If you'd bought it and you'd bought $10,000 worth and you'd sold it, you'd have made a total of $22,000 if you'd done that with all of them. I have 13 active positions. That's companies that I have told you to buy that I have not yet sold. Those companies have an unrealized profit of $7,781.66. So our total profits of dividends, realized, and paper gains total $30,058.59. So that equates to a return of 34.06%. And that was just for 11 months. If you annualized it, and I did that for the next, for an entire year, it would be closer to 38.25% return on investment. The goal is, one of my goals as an investor is to not lose money. Another one of my goals is to outperform the S&P 500. If I can't outperform the S&P 500, you should just take your money and buy the S&P 500 and forget about it and let the market do what it does. I believe you can beat the S&P 500. If you remember last year, I was able to do it. This year, the S&P was at 2724.87 on February 4th when I made my first prediction. Today it stands at 3230.78. That's a return of 18.57% for the S&P 500, and that does include dividends. So I've outperformed the S&P 500 by 15.5% over the last 11 months. I'm very, very proud of that. That's a really good number, and that really is sort of what has continued to egg me on to keep doing this. Here you can see my sold positions. I'll start about the one in the red first, Argan. I have told you in previous videos that I was planning on selling that. As you know, we have an awful lot of capital gains, short-term capital gains this year, and this stock was down 10%, and I thought, you know what? I think I'd rather have the 10% capital loss to offset capital gains than continue to wait for this particular stock to come up. I think Argan is still a good company. I think Argan is very likely to rebound. I have no reason not to hold it other than I get an instant tax benefit by selling it, and I'm not sure it'll go up in the next 2 or 3 months, and I think in 90 days I can rebuy it and not have a tax consequence. But other than that, you can look at all of these stocks. These are all stocks I told you to buy. The amount of money that I made on those stocks, the return, it's all there for you. One thing that's going to really bum me out is that in all future videos, I'm not going to allude to this anymore. This is last year. What I did last year doesn't, what have you done for me lately matters in investing. And so I'm going to have to start over. And I'll tell you the honest truth, it's been nice every time I make a video knowing I sort of have scoreboard, right? I can point to all these stocks and go, guys, I know what I'm doing. But I'm not going to bring this up again. We're going to focus on the future. We're going to focus on the stocks we tell you to buy next. And so you won't see these numbers and you won't hear me brag about past results in future videos. So this is the stocks that we currently own. This is the stocks that we'll be moving forward with in the future. And I'm excited. I think these companies are going to do very, very well. I continue to be a big fan of them. I've got some things brewing. However, one of the things that I want you to be aware of is I'm becoming very concerned that the market is overbought. And I'm thinking that we might want to be doing some strategies that will alleviate our risk and our exposure to some of this overboughtness. Oh, is that another word? Maybe that's not a word, but to the fact that the market has been hot for a very long period of time. I'm finding it very, very difficult to find stocks to buy. It used to be I had to choose which of 6 or 8 stocks was the best buy, and now I'm really saying there's 2 or 3 stocks here, and I'm not sure any of them are a great buy. So you're going to see that I have about $121,000 in portfolio, which means I have about $29,000 in cash. I would be very surprised if 6 months from now I didn't have more cash and less stocks, unless something was to change. Also, I wouldn't be surprised if a lot of these stocks don't get liquidated and I move to a higher cash position. I'm not ready to pull the trigger on that yet. I'll let you know when I do. But the market, I think, is closer to the top than it is to the bottom. So that's it for the year end. I'm really excited about 2020. I think it's going to be fun. I want to thank all of my followers, all of my subscribers. It's cool. I got to tell you, when I wake up in the morning and I look on my email and I get something from YouTube saying you got 2 subscribers last night, and it was even cooler. 5 of you guys told me where you're from, and that's cool to know that there's people in Rome and in Dubai and St. Petersburg and Finland that are all watching me. I mean, how the hell did you guys find me? It's very, very cool. I'm excited. So thank you very much, and let's go kick ass in 2020.